We see you as you sit behind the wheel of your truck. We see you shake out the nerves before you pick up your hammer, your scissors, your pots and pans. As you find new ways to keep the lights on and put the pieces back together, we see you. As you straighten the rows, keep your customers safe, and crunch the numbers, we see you. As you head back to work, we see you. You've got this. We're open to help you reopen. Visit bbb.org.
Hello and welcome to this edition of the Building Trust in Trying Times webinar series. I am your host, Dale Dixon. So good to have you with us today. And backed by popular demand, we have Darin Leong with us today, an attorney. We're going to be focusing on the PPP program out of the SBA. Just a bit of housekeeping as we get this webinar up and rolling. This webinar is live for BBB accredited businesses. Those are businesses that have taken a pledge to uphold the standards of trust, basically to do the right thing because it's the right thing to do and be held accountable to those standards. It helps businesses set themselves apart in the marketplace. Also, it is a differentiator, helping customers find those trustworthy businesses. We thank you for being a BBB accredited business that definitely builds trust in these trying times. Thanks for joining us today. This webinar is being recorded. If you want to go back and look at it, you're welcome to. It's going to be posted in the social media channels in a variety of places. It's also streaming live on Facebook right now. There is a Q&A option for you. If you have some questions for Darin coming up, make sure and write those out in the Q&A box at the bottom of your Zoom screen. Super simple to do. Also, while you're there, you can read through the other questions that are being posed by participants in this webinar. As you read through those, you will notice there is a little thumbs up icon. Click that thumbs up icon. What you're doing is you're upvoting the question that is most relevant to you. We're going to go to those questions first, as we only have 1 hour total for this webinar today, and we know we have a lot of questions coming in. So once again, the Q&A box, be sure and use it, upvote those questions that are most relevant, and we will answer those upvoted questions first. And without further ado, our guest today, Darin Leong. He represents clients in a wide range of employment and labor matters. Darin has developed over the past 15 years to representing clients in employment and labor law matters in a variety of areas. He began his career in New York City, representing a variety of Fortune 500 companies in all aspects of employment and labor law. Darin is now in Hawaii, has been there since 2007, focusing exclusively on employment and labor law. And he is with us today for the second time around. And Darin, thank you so much for being with us. And with that, I will say, the floor is yours for the latest update on the SBA, PPP, and the EIDL loans.
Great. Thank you, Dale. So a bit of housekeeping. We're going to talk about forgiveness under the PPP today. We have a memo that summarizes these sort of things, but the updated version of this memo will get posted later today, I think probably in the next 4 hours. So in the chat box right now, I will go ahead and post a link to the public Google Drive where that memo is located. But just know that version 7 is the one that will be uploaded later today, and that's the one that you'll actually want as current. The reason why that update is important is because this past Friday is when the SBA and Treasury issued a new interim final rule on forgiveness that's 26 pages long, and then also issued a second final rule on rules for banks getting reimbursed and the process for the forgiveness applications and that sort of thing. So there was quite a bit that came out on Friday, and we're just finishing up those edits. So if you have a version that says anything earlier than May 26th, then it will not be current. So the topic for today is forgiveness under PPP. The rules have continued to layer one on top of another. So we're going to go through it sort of in sequence, but if your brain is not hurting by the end of this, then there may be a problem or you went to MIT. the caveat also to this is there is a lot of talk in Congress right now, and there is bipartisan support for extending the 8-week period for forgiveness. There are various versions of this bill floating around. There's several in the House, there's one in the Senate. They all include some sort of extension to the 8-week forgiveness period. And some of them include other things like eliminating the 75%, 25% rule, which we'll talk about in a minute. And so the takeaway to that is there is a reasonable or a reasonably good chance that in the next 1 or 2 weeks that what I am talking about today will change significantly. So you should sort of stay on top of it. And I'll also try to discuss how to sort of make decisions in light of the fact that the rules may change to extend the 8-week period or to make other changes. Okay, so I take it most of the people on this call have a PPP loan. You are probably in the middle of your 8-week period of using it and looking forward to trying to figure out the best way to make sure that the maximum amount is forgiven. So the overall framework to try and keep this all organized, you should think about this in terms of essentially 5 rules, and they break down into the first 2 rules, which is what I can use PPP for and during what time frame. So you build up that amount that's potentially forgivable, and then the next 3 rules are the 3 different ways in which that amount can get knocked down. So say you spend $100 on forgivable PPP expenses. There's 3 ways in which it could get knocked down. One is what we'll talk about, the 75-25 rule. The second is reductions in full-time equivalents, or FTEs. The third is pay reductions in salary or wages of individual employees. And we'll take a deep dive into each one of those 3, but try and keep that organization in mind, because once we start diving into, say, FTEs, full-time equivalents, it gets into the weeds, and there are exceptions to the exceptions. And so just take a step back. The overall is what I spent that is forgivable, and are there any reductions to it? Okay, so rule number 1 would be what funds may be used for allowable uses. And there are 2 categories here. So the first is payroll expenses, or payroll costs, excuse me, is the correct term. And the second is non-payroll costs, okay? So you've probably heard this before, but payroll costs include things like salary, wages, tips, that sort of thing. The Friday update from the SBA did clarify a major question that we had, which was whether bonuses or hazard pay count in payroll costs, and the answer is yes. So now you can consider payroll costs as salaries, wages, tips, bonuses, or hazard pay. The other thing that was clarified on Friday is something that we've felt very strongly was part of the statute, but they finally just came outright and said it, which is, if my business is closed and I've been paying employees who are on furlough to get the payroll costs up to make sure that there's maximum forgiveness, does that count? And the answer is yes. So payments to furloughed employees, which includes employees who are not able to perform their day-to-day activities, either because of lack of economic demand or public health considerations, i.e. the stay-at-home order or shutdown, that sort of thing. That all counts. So all of that counts as payroll costs up to a maximum per employee of the prorated version of $100,000 a year. And that breaks down to, for the 8-week period, $100,000 divided by 52 weeks multiplied by 8 weeks to get proration over the 8-week period. So the maximum amount per employee of this cash compensation is $15,385. It's actually $15,384 and change. SBA rounds it up to 385. So $15,385 is that maximum number. The other portion of payroll costs are retirement contributions and health insurance contributions, as well as state and local taxes. For employees who are non-owners, you can tack on the employer paid retirement contributions and health insurance contributions. That can go on top of the $15,385 for employees, but not for employers. Okay, so if you are an owner, if you are self-employed, if you are a sole proprietor, if you are in a general partnership and an owner on that basis, all of those different owner permutations are capped at a total of $15,385 per individual across all the businesses you own. So doesn't matter if it's 6, 10, 2 businesses, your owner compensation in total taken would be capped at $15,385. That means you, for owners, you cannot tack on the retirement healthcare on top of the $15,385. Okay. Other types of payroll costs include vacation, parental leave, family leave, medical or sick leave payments, to the extent they are not the types under the Family First, FFCRA. Separation allowances also count, and those are the main ones. For non-payroll costs, okay, so the second category of allowable uses is non-payroll costs. The big ones are rent and utilities. The next one after that is mortgage interest. So let's take them sort of one at a time. So for rent or lease payments, it needs to be for a rent or lease agreement in effect on or before February 15th, 2020. The idea behind that is they don't want you to add a new lease, now and count it. They want to see it sort of early in the year. The clarification from Friday and also the application is that for business rents or lease payments, it's for real or personal property. They did not define personal property, but personal property as we understand it generally would be things like the copy machine lease, furniture leases in the office, business car, business vehicle, those types of leases. We think those are all personal property leases that would potentially qualify. For utility payments, that also needs to be in effect on or before February 15th, 2020. And that is payment for the service or distribution of electricity, gas, water, transportation, telephone, internet access, those sorts of things. Cell phones are covered. One piece that is not actually distribution is gas counts as a transportation utility, but utility payments fall under non-payroll expenses. Mortgage interest on real or personal property also counts, but there's a real limitation here. So there's no principal counts and there's no prepayment that's allowed for mortgage interest. So those are the 3 categories of non-payroll costs. So business rent or lease, utility payments, and mortgage interest. You may hear things about interest on other debt obligations, and those are not forgivable. They might be otherwise just allowed uses of the money, but they are not forgivable. So other debt obligation interest is not forgivable. Okay. Rule number 2 is when you can use this, when you need to essentially have these costs happen. And the statutory language is costs incurred or payments made, which there was a lot of confusion about early on. And SBA has made a valiant attempt to clarify this and has done 80% of the job here. So we'll take this in 2 pieces: payroll costs and non-payroll costs. So first of all, for payroll costs, the 8-week period, which they call the covered period, you have potentially 2 choices of that 8-week period. So anyone who is on a bi-weekly or more frequent payroll, in other words, you pay every 2 weeks, you are allowed to choose between the loan disbursement date to start your 8 weeks, or to start it as of the beginning of the pay period that first comes after disbursement. So if, for example, May 1st was disbursement date and your next payroll period starts on May 5th, you have the option to start the 8 weeks on May 5th if you are on a bi-weekly or a weekly schedule. And that has an administrative convenience, because then if you're bi-weekly, then you just take 4 payroll periods and it's nice and clean. For those, Hawaii allows semi-monthly. If you're on a semi-monthly payroll, you have to use the normal covered period. So that is the date of disbursement. So once you figure out which of those 2 covered periods is the covered period, or the what's called alternative payroll covered period, which is the one that starts on the payroll date. The next question is, well, which costs count within that? So for payroll costs, there are about 4 places in the application and the interim final rule that suggest that it is either payroll costs incurred or payroll costs paid. The problem is that there are 2 places in both of those documents that suggest that it needs to potentially be incurred and paid in the 8 weeks. So I apologize for the ambiguity here, but essentially the response is we are about 4/5 of the way confident that it is either payroll costs incurred or payroll costs paid within the 8 weeks. So what does that mean? A payroll cost is incurred on essentially the date in which for example, the wage is earned. So a person who works on May 1st would be the date that payroll cost is incurred. The date paid for a payroll cost is either the dates paychecks are issued or an ACH payment is initiated, like electronic funds transfer is initiated. So those are 2 different dates. For payroll costs that are incurred at the end of your 8-week period. So for example, if you're in the last week of the 8 weeks and the employees work that last week, week 8 of the covered period, but the paycheck happens after the 8 weeks, that clearly counts. So the situation where an employee works at the end of the 8-week period, but the paycheck comes in ordinary course a week later, say in week 9, that is allowed. So the stuff for payroll costs that is clearly allowed is payroll costs that are incurred within the 8 weeks period and paid within that period or on the next payroll date right after that 8 week period. That is, there's certainty on that. The point of ambiguity are the things such as paying either prepayments or post-due payroll costs. And it appears that as long as those costs are paid within the 8 week periods, it's allowed, with a couple of problems in the rules that have been issued that raise some doubt about that. Okay, the easier one is non-payroll costs. Non-payroll costs is costs incurred or paid within the 8 week period. So for example, back due rent would count. If your 8 week period is May 1st to sort of the latter portion of June, and you're paying for April rent or something like that, that would count. So for non-payroll costs, it is costs incurred or costs paid within the 8 week period. And then the same rule applies if the cost is incurred at the end of the 8 weeks, say the last week of the 8 week period, and the next billing date happens after the 8 weeks, as long as it's paid by the next billing date, that will also count. Okay, that's a mouthful. So that would give you the maximum amount of payroll costs and that sort of thing that would be allowed for forgiveness. Going back to what I said at the beginning, I think that this may get easier depending on congressional action. So the reason why we're all fretting about, well, if, can I prepay some of these payroll costs, or can I use the money for past due rent and get forgiveness for it? All of those questions, they all stem from the problem that the 8 week period for many of us is too short. And for a number of businesses, they're shut down through parts of the 8 week period or all of the 8 week period, and weren't able to bring employees back at full scale and that sort of thing. So there's a struggle to cram everything into the box. That gets much easier if this extension happens from Congress. So I would say keep an eye on that, because if all of a sudden Congress says instead of 8 weeks, you're allowed 12 weeks, for many of you, these sort of difficult issues of costs incurred and payments made, they'll go away. So keep an eye on that. Okay, the 3 ways in which your forgiveness may get reduced. So rule number 3, which is the first of these reductions, is the 75-25 rule, which is that no more than 25% of the forgivable amount may be used for non-payroll costs. The other way of stating it is whatever your forgivable amount is, it has to be at least 75% or more as payroll costs. The other way to think about it is non-payroll costs as compared to payroll costs can't be more than 33% of that. So if you have $100 that's applicable for forgiveness, then 75 or more needs to be payroll costs, 25 or less needs to be non-payroll costs, and that is the rule. It is not an absolute, if you don't meet 75% of the total loan amount, you don't get any forgiveness. It's based on what your forgivable costs are. That confusion was caused by an earlier interim final rule, which said that 75% of PPP funds need to be used for payroll costs. They are saying, do not take that literally. And the 75-25 rule gets applied to the amount that you spend that you're asking for forgiveness. And that's reflected in the forgiveness application. So that 75-25 is the simplest of the two potential reductions. The next one, which we dub as rule number 4 in our memo, is the reduction in individual employee pay, either on a salary pay or wage basis. And the reason why this one and then the next one get sort of a little bit complicated is because there's a reduction formula for reducing employee pay, and then there is a safe harbor, which is a totally different calculation. So let's get into the weeds here for a second. The concept is that comparing the employee's wages in the 8-week period to the first quarter of this year, if the employee has a reduction of more than 25%, that's going to get counted against you on forgiveness. So the simplest example would be, say the prorated salary over that portion was in the first quarter, you're talking about 100, and in the 8-week period, they're paid 70, then that's a 30% reduction, not a 25% reduction. So that extra 5% is going to get counted against you. What happens here, though, is, and what's showing up is there's a difference between people who are on salary in the calculation and people who are paid hourly wages. So even if the hours go down, if the hourly wage remains constant all the way through, so for example, they're paid $15 an hour in the first quarter, they're paid $15,000 in the 8-week covered period or alternative payroll covered period, that is not a salary reduction. So the reduction for that employee on the salary wages will be 0. It might have an impact on the next one, which is a full-time equivalent, but it will not impact, and you see that in the calculation in the application form. If you have an employee who is subject to this more than 25% reduction, there are a number of ways in which it might not apply. So one is the what we call the safe harbor. And this one has different time periods. So the way this is applied is you take the employee's wages as of February 15th. Note that that's totally different than the first quarter. We're talking about now February 15th. And for the safe harbor, if the wages went down between February 15th and April 26th, that's part 2, then as long as the February 15th wages are restored by June 30th, then there is no reduction for salary wages for forgiveness for that employee. You should note that June 30th for a number of employees will be, or for a number of you, will be after the end of the 8-week period. So that is how it's intended to be. This is a totally different set of dates, and that's just how the statute is written. So if you have a reduction for individual employee pay because the 8 weeks was too low compared to the first quarter, the next thing you do is look at the safe harbor, which is, again, February 15th. If it went down, then between February 15th and April 26th, as long as you bring it back up by June 30th, then that's allowed. Okay, the next one is reductions for FTEs, which is full-time equivalent. This is calculated on an aggregate basis. So the reduction for FTEs, the first look is whether there's a reduction at all, which is you have 2 reference periods or look back periods. Again, these are totally different dates than the other ones for whatever reason, but the dates are February 15th, 2019 to June 30th, 2019, whatever your FTE average count per week was in that period, or you can choose the first 2 months of this year, whichever one is lower. And then for seasonal employers, I won't go into that, but that's another calculation on a reference period. So whichever reference period is the lower one is what you'll pick. And then you are comparing that to the 8-week period. And if your average full-time equivalent on a weekly basis is at or above the reference period, then there's no reduction. So for example, if you're using January, February of this year, and you have an average of 10 FTEs during that period, and you have 10 FTEs during the 8-week period, that would mean no reduction. If, however, during the 8-week period, you have 9 FTEs on average, then you would have 9/10 of what you're supposed to have, and your forgiveness amount will get reduced by that percentage, by that ratio. So if it's 9/10, then your FTEs will get reduced by 10%, okay? The safe harbor for this one also wipes away this rule if the safe harbor applies, which is you can avoid reductions for FTE reductions if, again, February 15th, you take your FTE count, and if your FTE count goes down between February 15th and April 26th, and if you restore that FTE count by June 30th, then there's no reductions for FTEs. I skipped over the calculation of what is an FTE. So an FTE is anyone 40 hours or more counts as 1.0 FTEs. So if they're 50 hours average, or if they're 40 hours average, or 45, those are all 1.0. For the part-time FTEs, you have 2 choices, and you have to, whichever one you choose, you apply it across all the different times you need to calculate it. The first is you just take the average weekly hours, divide by 40. So if it's 30 hours, you divide that by 40, and that would be a 0.75 FTE. The second choice you can choose is just everyone under 40 hours on average, that you can count them as 0.5. Just count everyone as 0.5. You will need to do this calculation for both options to see which one is more favorable. Because you have to apply the same calculation to both the look back periods and the 8-week period, you should do the calculation of the FTEs using the actual part-time formula and the 0.5 formula to see which one is better. FTEs also have quite a bit of ways in which you can avoid the reduction. So there's that safe harbor. There's also anyone who you offer their position back in writing and they reject it, and you report it to the unemployment office within 30 days, that will not be counted against your FTE reduction. Also, employees fired for cause, employees who voluntarily resign, or employees who request and receive a reduction in hours. None of that counts against you for FTE reductions. And the way that shows up is in the tables that you will end up completing on the forgiveness application. So I know, Dale, that I went longer than I thought I was going to take to go through this, but I'm happy to stick around and answer questions.
It is much appreciated. And I tried my best as you were going through that to be reading through the questions and hitting answer live if you're watching the questions as you went through this to help weed things out. But here's the deal, Darin, we're still sitting at 102 questions, and we have all of 25 minutes. So we're going to answer as many as possible. I'm going to ask our viewers to go to that Q&A box, upvote those questions that are most relevant to you. We will answer those first, and we're going to start with Brian's question that's been upvoted 28 times. The PPP forgiveness application asks for idle advance amount and states, note, if applicable, SBA will deduct idle advance amounts from the forgiveness amount remitted to the lender. Does this mean that now part of the PPP is not forgivable if you also received an idle advance? Does it matter if the idle advance is used for other non-payroll items, not the same items as the PPP is used for?
Yeah, the idle advance will reduce the amount of PPP forgiveness by the amount of the advance.
Regardless of what that idle is spent for?
It should be, the advance will still reduce the forgiveness amount, I think, because it's presumed to be for payroll costs, etc. The loan portion of the idle will not affect PPP and has a broader range of uses.
Okay. Let's see. Debbie has asked the next question, upvoted 34 times. What about corporate officers of an S Corp? Are they considered owners or employees?
Officer would not necessarily be considered an owner. It would be people with actual ownership stake in the business, whether they are owner employees or owners.
Karen Hall, S Corp insurance. The owner does not have this deducted from their paycheck. The company pays the full amount. So does the cost for the owner, is the cost for the owner considered 100% allowable payroll health insurance expense?
When you say insurance, if it's health insurance for an owner, that then just gets rolled into that maximum. So for the owner, whether it's net income compensation or paid any other way, the maximum amount caps out at $15,385.
Okay. David Harvey, the next upvoted question: what are the ramifications of getting both an idle and PPP loan as it relates to having them forgiven?
The advance is the overlap portion. So the advance will reduce the PPP loan forgiveness amount by the amount of the advance. The loan portion of the idle would be treated separately.
Does the owner's spouse that is an employee on payroll count as an owner or an employee?
I think that would be the situation of whether that spouse actually has ownership of the entity itself. There's no explicit guidance from the SBA or Treasury on that point. Taking the guidance on its face is just actual owners, regardless of marital status.
3-word question, but it's been upvoted 24 times from Desiree. Payroll taxes included? Question mark.
Certain ones. So the employee portion of payroll taxes, FICA, Medicare, that's taken out for the employee. That is part of the payroll cost. So if you are paying the employee $100 of wages and you have to take out Social Security from the employee side and that sort of thing, that gets included. You include $100. What you cannot include is the employer portion of the federal withholdings, like the employer portion of Social Security, that sort of thing.
What kind of transportation is forgiven?
The only one the SBA has given an example of is gas. So for utilities, it would be gas. On non-payroll expenses, For transportation, business vehicles now, the leases appear to be included as non-payroll costs.
Brenda asks, how do you book the entries when you receive the money and when you disperse it through payroll and rent?
Yeah, I mean, the cleanest way is probably to have a separate account for the PPP funds themselves. And as you are expending them, you expend them from that account and notate where they're going and the documentation for it. That's probably the cleanest. The other way to do it is, you pay your payroll how you normally pay your payroll, and then you reimburse to your business account from the PPP account, and you notate exactly what that reimbursement was for, and have the documentation of the payroll registers or whatever it is, the rent check receipt, that sort of thing, so that you have a nice, clear, organized way to identify where the PPP funds went.
Elaborate on the incurred and paid language. For specific example, I was funded on April 17th and paid payroll on April 20th for the pay period April 1 through the 15th. Does that payroll money count toward the 75%?
Okay, so funded on April 17th, payroll date is April 20th, but the payroll period was when again?
The 1st through the 15th.
1st through the 15th. So this is the situation where I said we're 80% confident that as long as it's paid on April 20th, it would count. There are a couple of places that cause us to pause on that. One is page 2 of the application, where they use the word and instead of or. And the second is the example in Friday's interim final rule on page 12, which kind of suggests the opposite. So this is one where I think there is at least still a little bit of ambiguity on. And my hope is that Congress will just change the law to extend 8 weeks to 12 weeks, 16, et cetera, and it'll make this a non-issue for you. But for the moment, I think you need to sort of characterize that as something that you will ask for forgiveness. If you have another payroll expense that works much cleaner in terms of when you submit your application for forgiveness in total, you'd want to use the cleaner one. But if the only thing you have left is this piece, then yeah, I would say you would submit it and make an argument for it.
Aaron asked the question, are fees paid to a payroll service considered as payroll costs?
I do not believe so.
And have we determined that giving out reasonable employee bonuses, even for management, subject to the $100,000 max, is an acceptable way to try to hit our 75% threshold?
Yes. So the interim final rule on Friday made that explicitly clear, that bonuses, hazard pay count. On this one, so a lot of you are in, say, week 5, week 6, week 4, week 3. If you're going to try and make up that 75 with a bonus, for example, or some kind of one-time payment, I think that it may be worth waiting to the end of the 8-week period to see, because again, Congress is mid-flight about to potentially change the law, and if they do, and they all of a sudden say, hey, 8 weeks is now 12 weeks, then instead of paying it out as a bonus to get up to 75%, you might decide to just keep paying normal payroll past the 8 weeks and consider that forgiven if the law changes. So I think you want to wait as long as possible, up to the sort of the last moment you have to pull the trigger.
Okay. Darin, if you want to grab a drink of water because you've been talking nonstop for 40 minutes, you are welcome to do that. Just a bit of housekeeping. We're up to 115 questions now in the Q&A box. We have 15 minutes left in this webinar. So thank you so much for your patience as you're watching this and your understanding that we're not going to be able to get to all of these questions. We really appreciate you joining this. I would encourage you to capture Darin's name and do a web search. Darin has also posted the latest document that he and his team have put together on this that will be a big help to you. And we're going to continue to, we'll post this. You can go back and re-watch because of the amount of information. I feel like I have an MIT degree now after watching this, Darin. Thank you very much. Philip asks our next question. Oh, and I will remind you, Darin is a fantastic attorney, but he's not necessarily your attorney. And he's giving us some great advice here. And we're seeing that information is changing and rules are being reinterpreted as we go through this. So just keep the grace in mind as well as we go through this process. Philip Johnson asks, if an employee is unable to return to work because they are caring for their children during the shutdown, will they be safe harbor exempt so we don't have an FTE reduction?
So that's one of the good questions that's come up because it's not really covered in the rules. I would assume the spirit of that is yes, it would not count. I think that would probably fall under a voluntary reduction in hours, which SBA has said that is excluded.
Regarding payroll costs incurred and paid, are costs incurred and or paid both eligible, or do you have to pick one or the other? We pay every 2 weeks and would actually have 5 payrolls if we use paid as well as incurred payroll.
So let me answer the part of the question that I think is not intended to be asked, which is if a day worked is incurred on May 5th and it's paid on May 12th, you can't count it twice. So that's, you can't count $100 paid as $200. That's clear. On the issue of whether you can use those 5 payroll periods, it's the same answer as before, which is we think that for payroll costs that it's paid or incurred. So as long as it's paid in that 8-week window, I think the arguments are stronger than not, but still with at least a little bit of ambiguity, that as long as it's paid within the 8 weeks, regardless of when it's incurred, that it would count as a payroll expense.
Is the 75% paid a yes/no question? For example, if the 75% of the loan was not spent on payroll expenses because we calculated wrong in the beginning, will none of the loan be forgiven, or will a portion still be forgiven?
Yeah, so it's a portion. So if your loan is $100 and you only use $10 of that loan, then $7.50 is payroll costs, and $2.50 or less is non-payroll costs forgivable.
Philip writes, we have commissioned sales reps who meet in person with businesses. During the COVID shutdown period, they've only been able to work on the phone from home. Their sales have come in at 40 to 60% of their normal pace. Can we increase their commissions for this loan period in order to bring their earnings back closer to normal?
Yes.
An anonymous writer asks, with 12 upvotes, we had documentation that 1099 contractors were included in the original calculation for the loan, but then it says that we cannot include them in the forgiveness 75% calculation. However, my banker said we could include them if we know that they did not apply for the PPP themselves.
So I'll correct the assumptions in that question. So independent contractors payments do not count either for calculation of the loan amount or for forgiveness or for allowable use. Technically, an independent contractor is a separate entity from an employee. So an employee would fall under your business's umbrella. An independent contractor is technically a separate business that would have the opportunity to apply for their own PPP loan. So it would be, the independent contractors should be completely excluded.
So can the PPP loan be used 100% for payroll, or do some of the funds have to be used for non-payroll items?
You could use 100% of it for payroll. The issue with the 8 weeks is that, your payroll loan amount was 2.5 months, but your forgiveness period is 8 weeks. It's a shorter period. And what that calculates out to, more or less, is that if you pay everyone 100% of their pay for that 8 weeks and don't have any reductions, it will come, for most businesses, it will come pretty close to 75%. If for whatever reason, bonuses, et cetera, that it goes up higher, then that's allowed.
Madison asks, how do I submit our payroll documents to be forgiven?
So the bank that lended you the money, whichever the lender was, not necessarily a bank, could be a credit union or a fintech. They are going to have an application process, whether it's electronic or whether it's paper document. It's going to track the forgiveness application form that SBA published about a week ago. So you can find that application form on the easiest is the Treasury website. I think it's home.treasury.gov. And then if you go there at the sort of top banner, there's a link you can click to, and then there'll be a big list of available resources, and the forgiveness application is in that list, and you can look at it. The way I explained it today is the rules that kind of make up that application, but the application form is drafted similar to like an IRS tax document. In other words, it says input line 1 here, and if line 1 is above line 2, then delete, or put the subtracted amount and then jump to line 13. So it has instructions like that in it. But if you unpack the instructions, they're essentially applying what I described as the rules today.
Please cover sole proprietors, 1099 individuals. Yeah,
so a sole proprietor, you yourself are the 1099, not you're paying someone else at 1099. That is a simpler calculation. You're going to be maxed out at $15,385 or whatever your 2019 compensation was, the lower of that amount. So if your 2019 Schedule C, for example, your self-employed income calculation was $50,000, then that's going to be the upper limit of your forgiveness amount, prorated over the 8-week period. So if you made $50,000 in 2019, then your amount will be, just shy of, I think, $8,000.
Don asks, does the $15,385 maximum payroll for an owner include state and federal taxes, or are they an extra payroll expense where the PPP dollars can be used?
It's a total of $15,385. That's the upper limit for, regardless of what's going into it, for owners, sole proprietors, self-employed, et cetera.
France, I don't know if this is going to be possible. I'll let you make the call on this, but Francine says, and it's been upvoted 11 times, would be great to have someone walk us through the forgiveness application by question.
So I don't know how appropriate it is, but so we've been running webinars on Save Hawaii Jobs and Businesses. And last week, Monday's webinar, so the YouTube channel for all of our webinars is Save Hawaii Jobs and Businesses. That YouTube channel has all the webinars. The one that we did last week, Monday, I think, is one where the accountant in our group, Stacy Katakura, shares her screen and walks through the application form.
So we've got a terrific team, Jamie Dillon and Jason Kama, who are working behind the scenes. I'm going to ask if they can go grab that link and put it into the chat box before we wrap up here in 6 minutes, so that our folks on this webinar can grab that link and go to the YouTube channel and find that. So our next question, deadlines. I think my head's swirling as you went through this at the beginning, but we've heard June 1st, June 30th, 8 weeks. What is for what? Just one more executive summary on where the deadlines and how those might be changing.
Yeah, so the big one is there's an 8-week period in which you have to have forgivable expenses, either payroll costs or non-payroll costs. From there, that's when you start getting into the weeds, whether you're using the 8-week period that is the covered period, or the 8-week period that is the alternative payroll covered period, that sort of thing. So, it's figuring out that 8-week period, figuring out what got stuffed into it, and then figuring out if you have to have any reductions of that.
Is the PPP loan considered profit?
I should step back a sec here because Stacy Katakura covered this. My understanding is that for amounts that are forgiven, the expenses that you paid for it have to be still reported, which effectively causes it to be taxable. So in other words, if you use the money to pay payroll expenses, you're not allowed to deduct that payroll as a business expense, is my understanding.
Okay. What would disqualify you for forgiveness?
Any number of things. If you receive the loan and you weren't supposed to receive the loan, if you are a type of business that is disqualified from qualifying for the loan. So if for any reason you have the loan you shouldn't, that would not count. If you violated the terms of your certifications, either in the application form for the loan or the application for forgiveness, that would also be a situation. And then the most recent final rule has sort of a list of scenarios where disqualification would occur. So if you go to the Treasury website and just go to the most recent interim final rule on the loan procedures, which was, I think, May 22nd. Yeah, May 22nd, that would have that list in there.
Okay. Tony Wood asks, is owner draw forgiven if no payroll taken and regular scheduled draws have been taken?
Walk me through that one more time.
Is owner draw forgiven if no payroll has been taken and regular scheduled draws have been taken?
Yeah, so the owner draws would fall into the owner category. And so you would apply the rules on net profit or net, or distributions, that sort of thing, capped at 15,385 or your 2019 compensation, whichever is the lower amount.
Tracy asks, and this has been upvoted several times, are all payroll costs included, such as what the employer pays to Social Security and Medicare, or is it payroll minus federal withholding?
Yeah, so that one we covered earlier. So the employer portion, it does not count, but the employee payroll withholdings would count as payroll costs.
Are state and city taxes part of the payroll cost, unemployment?
Yes.
I am an owner of an LLC and did not include my income in the application, so the total I received did not have payment to me. Can I get any compensation somewhere?
There There were procedures for example, partnerships where if the loan amount was too low, they were allowed to go back to the bank and have the bank correct the loan amount. So I would say check with your bank or your lender on correcting the loan amount. The same goes in reverse. If you got too much, it's a good idea to go back and correct it so that you have the correct loan amount. There are all kinds of government agencies looking for fraud right now, so it's worth doing that.
Good deal. We've got room for two more questions. Don asks, are shareholder distributions used to compensate a business owner considered as a payroll cost?
I think that would also qualify as the net income to owner, subject to the 15,385 or the maximum of whatever your 2019 compensation was.
And if Patty asks, if we received a loan on 4/29, so April 29th, when does the 8-week time period start?
So it either starts on April 29th, or if you are on a biweekly or more frequent payroll, you could choose at your discretion to start it on whenever the next payroll period after April 29th starts, but only if you are on a biweekly or more frequent payroll schedule.
Darin Leong, an attorney in Hawaii. I recommend that folks grab a hold of your name and be sure and look in the chat box right now before we close this webinar for the links that have been provided. Darin keeps an updated Google Doc that if you have the link for that, bookmark it and check it frequently. We've also shared a link to a YouTube channel for additional webinars that Darin and his team have been a part of. For more information on this, we're sitting at 117 open questions. Our sincere apologies for not being able to answer all of these questions. We would be here for hours upon hours, and we have Darin has been so gracious with his time for this full hour. We really appreciate it, Darin. You bring a wealth of knowledge and wisdom to this and clarity, which we are significantly in need of. So we really appreciate your time. Thank you so much.
Thank you, Dale.
And with that, we will wrap up this edition of Building Trust in Trying Times webinar. Thank you for joining us. Thank you for being with us. Be sure and watch the bbb.org website for the next webinar, as we will be bringing more information like this to you. It's in such high demand. Have a fantastic day.